Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. My guest this segment is Greg Reiter, CEO, Angel Investors Network. Greg, welcome to the show.
Hey, thanks for having me. Happy belated 4th of July.
You too. All right, Greg, how did you become the youngest owner of an investment bank at the tender age of 21?
Oh, first I got to start by saying that was my first big mistake in life. But I always ask people if they read the book Rich Dad, Poor Dad, because literally that was my life. And I always tell them, hey, if you know Robert Kiyosaki, tell them to start sending me royalties. But the short version is I was born into a very wealthy family in Denver, Colorado. They built high rises and strip malls and Chuck E. Cheese's and gas stations and custom homes. And my parents got divorced when I was 2, and I had 3 stepdads, 5 grade schools, 3 junior highs, 3 high schools. Visited my rich dad. My dad taught me to invest at the age of 19. I invested $2,000 in a company called Denning's Mobile Robots, and it was a pre-IPO. It went IPO 4 months later. It popped 7 times, so I turned my $2,000 into $14,000. Now, the only reason I got that opportunity is my dad put in $100,000, so I piggybacked off his $100,000. And we made 7 times our money. I'm like, I have found my home. I want to be a stock magnate, right? Like, this is easy. And really, I got my license and started kind of helping manage my dad's money. And my dad was in the Good Old Boy Network. And I started making 30, 40, 50 grand a month commissions. And the person I worked for was a little boutique firm. And they were taking half my paycheck. And there was 6 other guys. And between the 7 of us, we were doing about 350 grand a month in commissions. I went to my dad. I said, man, this guy's taking half our paycheck. I want to buy him out. And he goes, okay, go ahead, go do it. So that's what I did. And if I could take it all back, I wouldn't do that again. The wisdom I got, the street smarts I got was fantastic, but it was I should have never did it at age 21 years old.
Okay, good story. All right, you built Angel Investors Network. Tell our audience what that is.
Well, so my whole adult life, starting out with that story, I've been a really, really big believer in entrepreneurship, capitalism, free enterprise, and I've always helped finance the entrepreneurs. And over the years, I've got the name the entrepreneur's best friend. And when I kind of retired from the licensed broker-dealer market and moved out from Denver, Colorado to San Diego, I started Angel Investors Network. And I had this vision way back in 1997 that we could leverage the internet as a way to communicate with investors on a nationwide basis, and basically do what Shark Tank TV is doing on a nationwide basis and leveraging webinars and technology and kind of stuff that you're doing right now to make that work. And again, that was way ahead of its time. I remember telling people in 1997, oh no, video streaming's coming, it's going to be here, we can do this stuff. And but I started with the idea of continuing to serve entrepreneurs who needed help, as well as to expose and teach investors how to properly invest in this alternative investment category.
All right, break down the Shark Tank type of investing with unicorn investments for us.
Well, so typically, angel investing has always been categorized as we're looking for that 10, 20, 30x return. We want to put our money in a company. We want a low company valuation. We want it to be industry altering, disruptive, and we want the ability to make 30, 40, 50 times return on our investment, right? And now things are kind of morphing, and I believe they're morphing because of Shark Tank TV show, The Profit, West Texas Investors Club, and they're exposing to the average and the general public exactly what this kind of investing is, investing in entrepreneurs. But if you notice something, that now that you're hearing me speak this, you'll notice this, you're never going to see a disruptive technology, play on Shark Tank, because they're talking to, the masses. They want everyone to understand what's going on. So it's always a consumer type deal. It's a B2C type play. Right. And it's very easy to explain in a couple of minutes as opposed to a disruptive technology play. So I've started to classify those as what I call lifestyle investments, meaning we can make good money, we can make royalties, we can make dividends, we can make revenues, we can even create some equity ownership, but we're not looking for that 30 to 50x return. We're looking for that double-digit return with some upside and some cash flow, as well as supporting the entrepreneur. So that's kind of how I separate the unicorn investments, going, hey, I'm looking for that home run where I can make 30, 50 times my money, but most of our money is going into, that pop-up pet door or that product that can generate 50 million in revenues next 3 or 4 or 5 years, and have a nice return, create some nice income for us, but not necessarily, make us $100 million for our investment.
I got it. A lot of base hits. All right. Yeah. Let's move on to the next topic that we've got here. I wanted to follow up with you about how to have success in this alternative sector? You kind of touched on it now that you're getting base hits, but drill down a little bit for us on what you're doing with the companies versus just finding them money, because I think you're deeper than that.
Yeah, no, absolutely. So the Kauffman Foundation, which is this amazing foundation that was put together to kind of study this, and they've been studying stuff like this for decades, and they basically came to this conclusion that if you do your proper due diligence, which most people don't even know what that means, but to do the proper due diligence and vet the deals properly, you have I think the returns were like a 74% ROI year after year, as opposed to the people that didn't do their proper due diligence, they're making less than double-digit returns. So due diligence is so key. So that's number one, and then two is just deal flow. So people will come to me and they'll say, Greg, I got the hottest deal. You got to look at this deal. You're going to want to invest in this deal. I'm like, wait a sec. Before you tell me about the deal, how many deals do you see every year? Like, well, I don't see deals. I don't look at deals like you. I just this one. It's a friend of mine. I know this person, whatever. And I'm like, well, it's not a very good deal. And they're like, well, you haven't even seen it yet. I'm like, I know, but until you see 1,000 deals a year, you don't know what a good deal looks like, right? And so it's the same old deal like the real estate guys. You're putting all that kind of stuff together. So it's about deal flow. It's about vetting the deal. And then the other thing is about Rolodex. My partner, Kevin Harrington, my partner, Bern Ullman, and our Mastermind Investment Club, the whole goal is how do we leverage our Rolodex to increase chances of success and decrease, chances of failure and accelerate growth, right? So if we can't pick up the phone and go, Kevin, can you do this? Or Greg, can you do that? Can you open up this door? Can I get into Walmart? Whatever that is, then we probably are going to pass on the deal. And that's why we're starting this Mastermind Investment Club to expand our Rolodex. So the more people you have in your Rolodex, the more people you can call to help accelerate deals. So really, it's about that. And then the last piece of that is structure. It's so important that you know how to structure a deal. And if you watch Shark Tank, you see Kevin O'Leary always talking about royalties or royalties with equity kickers. And so as an early investor in this alternative investment category, you have to know how to structure the deal. Are you looking for preferred? Are you looking for convertible preferred? Are you looking for a debt instrument? Are you looking for a royalty? And we always want to be fair and reasonable and not strangle the entrepreneur, but we also want to protect our investments. So we actually took that whole thing and call it the DVRS method of investing: deal flow, vetting, Rolodex, structure.
Okay, and now you started something else called the Pitch Tank.
Well, yeah, so we've been supporting and sponsoring this event called Freedom Fest. And Freedom Fest was started by Mark Skousen. He's a financial money advisor, a newsletter writer, and he's tied into a whole bunch of money managers. And he started this event called Freedom Fest, which he claims is the largest gathering of free minds. Steve Forbes is a staple there. A lot of money managers are there. Like billions of dollars is represented at this event. So we've kind of been going there as Angel Investors Network, and I speak and I talk to potential investors about this topic of early stage investing and investing in entrepreneurs. And one year, about 4 years ago, Mark says, hey, could you do like a Shark Tank event? I mean, I know you're partners with Kevin. He was original shark on Shark Tank. Could you do like a live event? We said, yeah, let's do it. But we can't call it the Shark Tank because Sony would be upset about that. So we got the Pitch Tank. So what we do every year, we do it for 3 years, is we take applications. We get in between 600 to 800 applications each year from entrepreneurs that need to raise capital, want to get in front of investors. We seed through them. We find 20 good candidates. We all go to the Freedom Fest. They all get a booth, and there's about 2,000 to 3,000 investors at this event. And then they go through a preliminary pitch to a set of preliminary judges, and then we pick 5, and then those 5 people get up on stage in front of a couple thousand investors, and we have Steve Forbes, myself, Bert Ullman, and Kevin Harrington are the judges, and they get a 5-minute presentation in front of a couple thousand people. It's just a blast, a lot of fun, and they end up meeting investors, and people go to them and help invest in them and create their dreams. It's awesome.
When is your next event?
So that one's coming up. It's literally starts next week. It's July 12th through the 14th, or July 12th through the 15th in Las Vegas at the Paris Hotel. freedomfest.com.
Got it. All right. Greg, thanks for being a guest on the show. Really appreciate this. And when you find these unicorns that you've got coming across, or these base hitters, send them over to us. I want to talk to them so that we can talk about what they're doing to change the landscape in their silo.
No, I appreciate that because it really is about people like you, people like me, helping, the entrepreneur. And if I could leave you with this one thing that I created, I call it the torrential downpour effect. I raised the original seed capital for Home Shopping Network in the early 80s. We gave them $600,000 because we believed in them. We believed in them as entrepreneurs. We believed in their dream. And you look at what that $600,000 has created, what I call the torrential downpour economics, the trillions of dollars that have exchanged hands and created businesses on everything they touched. That's what we're doing, and we would love for people to join us. So I thank you. I appreciate you for that offer, and I'll definitely take you up on that. Until next time, have a fantastic day.
Well, you'll be back soon. We'll be talking to some of the people that you believe in and take it from there. Fair enough?
Fair enough. I appreciate it.
All right. You've been watching CEO Money with Michael Yorba. Don't forget to like us on Facebook and subscribe to our YouTube channel. Thanks for watching.